Now I'm going to move to our next question, right? Which is really about whether or not millennials should actually consider buying property as a private property as a means to earn passive rental income, because you have said some uh, you showed us some discouraging trends about HDB. So maybe another way that some millennials are thinking that maybe I just buy condo, right? Those 1 room, 2 room condo, and then I rent it out to all the expatriates who are coming to Singapore, correct? So what do you actually think of this particular question? And what would you say to a millennial who actually is having some of these views?
Are you looking for an honest agent to buy, sell, or rent your properties? Contact us at IPA in the description below.
Okay, so firstly, where do you get this passive rental income from? It has, because 90% of Singaporeans already own homes, right? And 90% of our, Singapore residents, which by definition is Singaporeans plus permanent residents. Since 90% of us are in owner-occupied homes, then it means that your tenant who is paying you the rental is most likely a non-Singaporean. So then the next question would be, why would there be non-Singaporeans in Singapore who would be paying rentals to you? So what attracts people to Singapore? When you open your doors, would people just be flooding in? Well, tourists might, but how many people actually comes to Singapore for long term who will be paying you a full year or 2 years of rental? It would be expatriates, right? It would be foreign talent. Or if you're buying something that is smaller or older or less expensive, maybe these are people from who are work permit holders or S-Pass holders. But just look at what COVID has done to us. In fact, even before COVID, last year, our total employment has been struggling already. The economy is undergoing structural changes. This year alone, first half of this year, the overall job situation, we lost 147,000 jobs just in the first half of this year. One more click. And if you move, see, 147 jobs lost, who are these people? Mainly the pass holders, right? Which means then that actually the number of people who are paying rentals today would have been significantly reduced. Then to the next slide, what is the number of people who are in Singapore who are renting properties? We look at the total population of 5.6 million. We know that there's about 1.6 million who are non-residents, non-Singaporeans and non-PRs. The Singaporeans and PRs in the red and the blue, those have been mainly accounted for because 90% of us own and live in our own homes, which means that the target market for rental is really in the 1.6 million. Now, out of the 1.6 million, look at the green parts of the graph of this pie chart properly. How many of them are staying in dormitories? How many of them are staying on site in their factories or on site in their construction work sites or on site in, for example, the shipyard? So when you start to take away all these employment pass, the work permits and the S-Pass people who may be staying in dormitories and off-site, then you also need to take away many students who are staying in hostels. And then you have got to take away the entire chunk of 100,000 foreign domestic workers who, by definition, if they are domestic workers, they are living with us, right? So that leaves how many people in the market who would be renting properties? One more click. And it is, these numbers may be shrinking, especially due to COVID. Even that very highly salaried employment pass people, for example, during my time when I graduated 20 over years ago, aerospace engineering was like a very hot and sexy course. Wow, you are aeronautical engineer. Today, how many of the aerospace engineers actually lost their jobs? And they are being sent home. And so that the pool of expatriate foreign talent tenants who are highly paid and who are able to shell out $4,000, $8,000 a month of rental, that pool has shrunk a lot, especially because of COVID. Now, question then is, post-COVID, will they come in? I don't know how long these COVID restrictions will last yet. Next slide, please. But one more click. Don't be fooled by this V-shaped graph on the left-hand side. V-shape is still below zero, and so the total, it is still negative. So even though it seems to be, it is just less negative. And so the total number of jobs lost in the first 3 quarters of this year is actually now what? 156,300. And then you look at the right-hand side. Sorry, I'm short-sighted. The number of employers who are expecting to retrench, as well as the number of employers who are expecting to hire more in the next 3 to 6 months, those numbers all don't look very good. So next slide, please. So the question then is, without ability to create a lot of jobs, so we now need to create jobs to backfill those jobs that we have lost in the first 3 quarters of this year. Many companies, in fact, today are still trying to reduce headcount. So we first have to create jobs to backfill those that we have lost so that we can bring ourselves back to the 2019 level. And then after that, we have to create even more jobs in order to fill up all the new properties that are completed in 2020 and 2021. So we have got a lot of room to catch up for the residential rental market. So next slide, please. Similar data. Question is, without sufficient strength in new jobs creation, in getting high value jobs, firstly making sure that Singaporeans are gainfully employed. Right now our unemployment rate is at 3.6%, which is a multi-year high. So we must first bring ourselves back to a bit more normal, such as 2 to 2.5%, meaning we have to employ a lot more Singaporeans first, and then we have got to create even more jobs such that we can then employ more foreign talent to come and fill in all these new jobs. Then our residential rental market will have a chance of picking up in rentals again. So I would say give it another 2 to 3 years before we can see this positive upturn. That is provided the powers that be are able to create tons and tons of jobs.
Hey, Swee Yong, thanks for walking us through this. So I just have a quick question, right? Because you see, right, in the past few days, so much positive news about COVID getting better, correct? The COVID situation in Singapore getting better. We are going to have vaccinations free for all the residents, and it seems that our cases are getting better as well. So, basically after COVID is over, do you foresee that, this renter market will actually come back, all these employment pass holders will actually come back to Singapore, and then people who rent properties will actually be doing very well?
Okay, so in the most positive case scenario that I can think about, the answer would be yes. So let's say by the year 2022, 2023, we would have created sufficient jobs to make up for all the jobs lost. We would then be able to create more jobs than what we used to have in the year 2019, such that we then go back up into a real recovery. However, what happens is that, well, technology, we keep saying that tech will be creating a lot of jobs. Yes, but while tech is creating jobs, technology is also disrupting jobs. So 7 or 8 years ago, remember when Uber and then subsequently Grab came into the picture, they hired, for example, just numbers that are tossed out of my head. Let's say for 100 engineers that Uber hired, they then created the app. The app then allowed us to do car sharing. And the car sharing is simply using up the free capacity that every private car owner has. And 100 engineers were employed by Uber, but that 100 engineers then disrupted the livelihoods of 1,000 taxi drivers because it allowed private car owners to share their unused capacity. Same for other applications. Many applications that simplify our lives. Yes, the companies will be hiring a lot of tech people to program the application, to go sell the application, but it got rid of a lot of people's jobs as well. Today, our production, you are a one-man show behind your screen, Jeraldine, and I'm a one-man show here. 20 years ago, this show would have to be produced by another guy who would be helping us to create, do the sound, another guy who would be helping us with the camera and the lighting, another guy who will be making sure that the network is streaming us, right? And you probably have 3 guys on your side, and I probably have 1 more assistant on my side. So today, with technology, these guys' jobs are not required anymore. So that's why we are actually progressing towards more and more of a gig economy, where there are still many high value, very well paid jobs available, but they are high value and well paid. They do not give you an iron rice bowl that will be 30 years of steady income, which will help you to repay 30 years of home loans. And that's why I'm preaching caution.
Okay, so Swee Yong, what you are saying is basically, even though there's COVID vaccinations, even though there's more high-tech workers coming to Singapore, especially for the second point, it doesn't mean that there will be more employment pass holders, because basically the introduction of technology kind of reduces the need for labor in a sense, and therefore the need for more employment passes, more need for more jobs, and subsequently lesser people to rent these private properties. Is that what you're saying?
Yes. So if you progress to the next slide, which is a very busy chart, I compile this every year and just focus on the yellow column. The yellow column shows the total population change, and in the red circle, 1 more click. In the red circle, yeah, this one. You see that actually since 2017, the total number of non-residents, we have created a lot of new jobs, but we have also lost jobs. So in fact, out of the last 5 years, 3 of the last 5 years, we have had a negative headcount growth in the category called non-residents. And non-residents would be those in the pie chart which are green. These are non-residents, are people who are in Singapore on passes: student pass, work permit, S pass, employment pass, foreign domestic worker passes, right? We are having a difficulty in generating a net positive number of jobs such that the head count will keep growing and growing. Then on the extreme right-hand column, that is the total number of additional housing units. And you see that in the last 5 years, the total number of additional housing units is about almost 200,000 added to the housing units. But yet, our population growth is just about the same number. So each housing unit will only be housing 1 person. Unlikely, right? Because on average, each housing unit takes about 2.5 persons. So the total population growth of the last 5 years, in actual fact, only required an additional number of about 100,000 or just under 100,000 dwelling units. But yet, we have supplied the market with close to 200,000 new dwelling units in the last 5 years. So mind you, this right-hand most column is the net new supply, net incremental supply, meaning we have already net off the SIRS, we have already net out the en blocs demolitions of the old properties. So our supply is sufficiently strong. We are not short of housing at all. And now our issue is that we are short of headcount, meaning we really have to get the whole machinery of Singapore Inc. together to create a lot more new jobs so that we can fill up some of these residential units that have been completed in the last 10 years. Next slide, please. So same question again, where will our tenants be coming from? And in the last 9 months, the jobs that are lost and some of the senior guys from the travel and tourism industry, some of the airlines that have decided to stop operating to Singapore, the logistics, ground logistics, especially those who are doing transportation, for example, every night the hundreds of buses that depart Singapore to Malaysia, many of these companies have closed or will close after all the job support and government schemes are over. Click again to flash out the bullet points. Yeah. So with all these jobs gone and with the job support scheme now tapering off to finish by March 2021, there'll be many more people whose ability to shoulder their mortgages would be difficult, would be in trouble. And so do expect from next month onwards to see a lot more mortgagee sales. Office and retail space, several million square feet have been given up. My childhood, I used to be one of those that you would call Centrepoint kid or Far East Plaza kid, right? You go to Centrepoint now and you go to Far East Plaza now and you can see how empty those malls are. What are you going to do with all those spaces? So same for residential space. When the tourists are not here, when the foreign talents are not here, where are you going to get the tenants to lease out your homes? So maybe shelve that idea for a while. Then globally, next slide, we are actually not just, we actually have to be cognizant of troubles that are outside Singapore, not just look at what we have in Singapore. US-China trade war, even with Biden winning the election, it will go on. He is not a person who is very friendly to China, even when he was a vice president. Brexit is turning out to be more and more of a mess. They are missing all their deadlines. The situation in Hong Kong, I've got friends there, not very nice. I quit from Twitter 2 months ago because it is so toxic in Twitter. And partly the wedge is being driven by this wealth and income inequality. And then back to the points we discussed just now, there are structural changes, which is job disruption, gig economy, aging demographics, and the decaying leases of not just HDB flats, there's also decaying leases in private properties as well. So, next slide. Real estate, by the way, those of you who are thinking about rental, real estate is actually not passive income. Those of you who really want to buy something to fire and forget, and you want a steady income, if you want to have real financial freedom, don't buy real estate. Buy bonds. Buy dividend stocks. Steady stocks that will just keep paying you. If you buy a piece of real estate, you have got monthly expenses. You've got quarterly expenses for maintenance. You've got monthly expenses for depending on how you pay your property tax. And then, of course, property tax could be an annual expense. And you have got to deal with property agents, nasty ones like me, or you have got to deal with your tenants who are asking you to do maybe, oh, sir, can I have a budget for chemical cleaning of the aircon compressors? Oh, Mr. Landlord, this shower head is cracked and is can you replace it? There, real estate, to make real estate work very well for you, you have got to be an active investment manager. Then you will really make profits. So those of you who are thinking about passive income, really shake legs and then gain financial freedom such that you can travel the world, gain your experiences, please consider other investment asset classes.
Wow, Swee Yong, I think what you share is really something that is very interesting, right? Because, typically when people think of real estate, they kind of associate it with something that, you just buy and then like let it grow on its own and things like that. And then collect monthly rental as passive income, but it's not really passive, right? Because you have to be a landlord, you need to take care of all the residents who are perhaps not very happy with certain things in the house, you chase people for money and so much other things that you need to do, right? So it's not as simple as it seems. So guys, if you agree with this, right, just take some photo of this slide, send it to your friends, share this on your Facebook wall so that other people can also benefit from the knowledge that Swee Yong is sharing with us today. So Swee Yong, I think we just take one quick question. Somebody say yes, property is a big headache. Yeah, correct. Yeah, let me just have a look at the comments that are actually coming in just to make sure that okay, we can address them. Hey Swee Yong, let me pose you this question by Simon. Simon is currently watching us from YouTube. So hello Simon, we would like to actually share this question with Swee Yong. So Swee Yong, let me read the question to you, okay? So given the current pessimistic job situation locally, why do you think property index is still on an uptrend, both for public and also for private properties?
I'm so happy you asked this question because it seems that the indices, the private residential index and the HDB resale index do not seem to conform with reality, right? It is exactly the same as if you were to go and look at the Dow Jones index or the S&P 500, or even looking at the DBS Bank share price is back to January pre-COVID share price. But you know that DBS for the next 12 months is unlikely to be able to make the same amount of money as pre-COVID, right? So why is it that the indices are not reflective of what is the situation on the ground? US, Germany is going for lockdown. New York has closed restaurants right through Christmas and New Year. The economy in the US is in the worst state, even worse than Lehman crisis. So why are the stock indices there celebrating? Number of deaths is all-time high. They just surpassed 300,000 deaths. Every 5 days, you have 1 million more new COVID sufferers in the US. The situation in Singapore is actually sort of similar. The indices are not going with what the reality is because the HDB resale index, there was a good article written by 99.co, which I posted and shared on Telegram. The relatively newer and $1 million, very high floor HDB resale transactions are the ones that are helping to pull the index up. In reality, if you look at HDB flats that are 20, 30 to 40 years old that are transacted, they are still creating new lows. Okay, so we are having a divergent market, but then when you compare how many transactions of HDB flats are the newer ones versus how many transactions are the older ones, you realize that the newer ones setting new record highs, those that are 35th story to 44 stories, let's say in Commonwealth, let's say in Toa Payoh Central, those numbers of transactions of the relatively new with high floor, so they are setting new record highs versus the very old ones which fewer people want to buy. They are sort of in equal numbers, which means then that the index is weighted and skewed towards these HDB flats that are relatively newer and transacted. In the private property market, the resale numbers don't look too good, but developers, after exiting the circuit breaker, developers were all geared up to launch heavy advertisements. All the property agents were lined up ready to support them. Developers are still giving property agents higher commissions to incentivize them to work harder. Now, with so much media and publicity going on, number of new sales transactions are also picking up pretty well. And therefore, on balance, when you combine resale private and new sales private, again, the new sales private prices haven't really gone down, even though developers are not making that much more because they are holding their prices, but they're giving up more commissions to the agents. Now, then when you add them up together, the index is still creeping up by 1%, 1.5% over the quarter. But in actual fact, the older resale privates, they are not really going anywhere in terms of pricing. In fact, once the bank moratoriums cease, and more, there are 36,000 home loans which are sort of under the forgiveness type of a special law due to the COVID situation. Once those things get worked out, you might see more properties in the market under the bankruptcy sales category. Then you will see prices coming down a little bit more. Otherwise, just check for transactions in Sentosa Cove. If I'm not wrong, 9 out of 10 or 10 out of 10 of all the recent Sentosa Cove transactions are money-losing transactions. So your question, thank you for your question. The market, the reality is not really what the index, the two indices are showing today.
Swee Yong, so if I were to just summarize, what you actually shared with us, basically, right, for those of you who just joined, because I just saw some new people who are joining, right? Somebody actually asked this question that I'm actually showing on the screen now. Why is the property index still on the uptrend? So basically, Swee Yong is saying that, of course, there are some properties that are doing well due to good agent commissions, due to, some other factors as well. However, it doesn't represent all the properties. So that's basically a summary of what he actually described to us.